How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on British pound versus the US dollar, GU. As you can see, after rating that buy side liquidity pool that we framed up above this swing high that forms on April the 29th, you can see price quickly reprices and sells right back down into that sell side liquidity pool below May 1st. So you can see we're leaving a premium territory and going straight down into a discount. Price is more than likely, when it comes to bearish setups, to move in a overbought condition, a much expensive condition, higher price action, and then go lower. We're leaving higher prices to go cheaper. That's what the market makers are going to do. Anytime you look at any bearish month, this is the normal characteristics that form. We're going to get either a rate on a high, a swing high forms above May's opening price, and that's where the commercials are probably more than likely net short. The heaviest net short order is probably that swing high or the highest swing high that forms above May's opening price. We also got a SIBI price traded up into that, so we noticed that more than likely bearish months will print SIBIs, at least one. If you take a look at the previous month, look at April. April had one to the downside here, another one here, and a third one before pulling back up. But many times the market makers showed signs of speed to the downside. This is more than likely their course of action and them producing those large ranges to the downside. Even if it's not a large SIBI or something very small, it is something that is significant in price because it's a fingerprint or a footnote for traders to pay attention to. If we take a look at the DXY, we can only make the assumption the same is happening. But inverse, we can see how the DXY also has a busy buy side imbalance, sell side inefficiency to the upside. I know there's a BPR here, but there's some type of swing low formation here. This swing low may be protected. Price may not want to come back down here because it filled in all the inefficiency that it has on the left side of the chart, and it's looking for higher price action. So see a price runs higher, and then today on Thursday probably made the high of the week, maybe potentially, maybe Friday might not get up to Thursday's high, and then price goes lower. Then that would mean we have another swing high that's going to form. If Friday does not come up and take out this high, we got another short-term liquidity pool on buy side that forms for price to then what? Raid in the near future. It's also going to be creating what? A lower swing high to just come up and take out the swing high up here. Sorry, a higher swing low to take out the swing high up here. So it's going to print a swing low that's higher than this one. This one is a lower swing high. If it's bullish, it's going to show that characteristic of higher swing highs, higher swing lows. That's a bullish trend. Vice versa. So when we're looking at GU, where's GU at? Looking at GU, everything inverse, it's going to create what? A lower swing high. Maybe a lower swing high forms inside this range here, and price goes lower. Thursday might be the low of the week. Friday may not take out this low. It could possibly take out that low, but Friday may not take out the low because Thursday made the low of the week after rating that sell side liquidity pool. And then we have what? A short-term ability to have sell side liquidity pool here to be rated. So it's going to create a short-term liquidity pool, sell side again. It's going to create what? A lower swing high, lower than this one here. Because if it's in a bearish trend, you're going to get lower swing highs and lower swing lows. So a swing high could be forming here. Price may come up and raid those highs again and then create another stronger or firm stance on the swing high and then go lower again. But its goal is going to be sell side liquidity if it is truly bearish. Now, if we take a look at some of the directly correlated pairs like EU, NU, and AU, we'll see signs that it's not doing exactly what GU is doing, actually. It looks like it's still going up. Do we get back up to this swing high here? Possibly. Possibly. Maybe it might be another false break on price and price goes lower. But we did have that previous idea of bullish momentum. We can see here EU runs this swing high with speed too. And that swing high is inside that fair value gap. So that's my entry technique on the lower time frames. You can see that here on the daily. And then price trades up, creating what? A higher swing low possibly is forming. So maybe Friday trades up, doesn't run this high, and it keeps going into next week. NU, same thing. We said that NU broke a swing high here. Bearish momentum could be coming into play, and it's going to go higher. This also looks like a Larry Williams smash candle. Traders brought, or algorithm, or market makers, or commercial speculators brought at this candle's high. Price is going to continue to go higher. That's a turning point here. Got everybody short. Price gets back up here, and it's going to continue going long. This is not what I want to see, of course, for GU. I want to see it go lower. But if the other currency pairs that are directly correlated and should be moving in sync with it, right? A symmetrical market, not an asymmetrical market. The market needs to be symmetrical. If these pairs are correlated in the positive relationship, they should be going in the same direction. That means something is up. And GU could be potentially doing what? Giving us a false break instead. GU may have ran this swing low just to get traders short one more time before it pushes up back higher. So that's what we have here. Do we see lower swing high sometime next week? Or is this a false break to get traders short? They run this low and everybody starts chasing it. You have to wait for confirmation. Unless you're an aggressive trader and you're really for certain and you're going to believe in the stance that GU is going to be bearish, you take that stance and you take that risk. Everything is risk. Everything is risk. Don't think that because you sat here and analyzed the chart for 2 hours means that now your analysis is going to be 100% correct. No, doesn't matter how long you analyze the market. If you're wrong, you're wrong. If you're right, you're right. And we'll see. But we need to know the subtle signs and cues to how price action is going to form. To keep it simple, we don't need to talk about complex ideas. The market's either going to start trending up in the next 20 days or trending down in the next 20 days, or it's going to consolidate. It's one of the three. It's going to suck for it to consolidate, but we know we can still find opportunities to scalp, find intraday trades, day trades during our kill zones, and find small opportunities to trade. All in all, we want to try and find some type of swing trade because it's better to compound, hold for a week, hold for 2 weeks, hold for 3 weeks, get that compound interest. Make sure those trades trade longer, right? We don't have to risk more. We just hold longer. Simple. Hopefully you found this insightful. Let's see if this narrative, one of the two of these narratives, comes true. I want to lean towards a lower swing high and price going lower. If not, we get caught in a false break and price goes up and we readjust. Peace.